Picture this, an 80-year-old man standing at a Bitcoin ATM in a supermarket, feeding in his life savings, while a scammer barks orders through the phone, and not even a police officer screaming, "They just stole your money," can stop the transaction in time. In today's video, the hidden world of Bitcoin ATM scams is exposed, how they work, why the FBI says losses have exploded to $333 million in a single year, and what this means for financial security and regulation in America. Stay with this video until the end, because the last section will cover concrete red flag phrases and behaviors that instantly tell you, this is a scam, walk away. Bitcoin ATMs are now in gas stations, strip malls, and grocery stores across the United States, allowing anyone to turn cash into cryptocurrency in a matter of minutes by inserting bills and scanning a QR code linked to a digital wallet. This convenience has created a perfect tool for criminals. The money moves fast, the transactions are hard to reverse, and once the cash is converted to crypto and sent to a scammer's wallet, it is effectively gone. FBI data show a clear and constant rise in fraud losses tied to Bitcoin ATM kiosks, about $12 million in 2020, $33 million in 2021, $78 million in 2022, $114 million in 2023, roughly $247 to $250 million in 2024, and an estimated $333 million from January through November 2025. That means in just 5 years, reported losses have multiplied nearly 30-fold, a spike that federal officials describe as not slowing down as crypto becomes more mainstream and machines proliferate across the country. On the surface, Bitcoin ATM scams usually start with a phone call, text message, email, or pop-up that creates panic, a supposed bank fraud alert, a fake government investigation, a tech support emergency, or a fabricated story about a loved one in jail. Scammers then push the victim into a solution that bypasses traditional banking safeguards. Go to a Bitcoin kiosk, withdraw cash from your bank, and deposit it into the machine using this QR code to protect your funds or pay this urgent fee. In Taylorville, Illinois, police describe scammers who first gain fragments of a victim's financial profile, enough to sound credible when they claim to be from the bank and explain away system outages, then direct the victim to local Bitcoin kiosks to move money. One Illinois case unfolded after hackers accessed just enough of someone's financial profile to convince them their bank's computer system was down, then walked them step by step through multiple kiosk deposits across different locations to dodge state limits. In Florida, officers found an 80-year-old man actively depositing tens of thousands of dollars into a Bitcoin ATM while on the phone with scammers, who kept him locked into the con until a responding officer physically grabbed the phone and shouted that no bank would ever have you do this. By the time the officer broke the script, the victim had already lost about $50,000, money that had been transformed into crypto and sent out of reach in minutes. Another case highlighted by ABC News involved 86-year-old Fran Bates, seen loading thousands of dollars into a kiosk after scammers convinced her that her bank had been compromised and that depositing into the machine was the only way to keep her safe. A Good Samaritan called police, and officers arrived just in time. Bates was a single button press away from sending her entire stack of cash irretrievably into a scammer's wallet. As the scam wave intensified, some states started scrambling to regulate Bitcoin ATMs, trying to slow the bleeding without shutting down the technology entirely. Illinois passed a new law in August capping transactions into kiosks at $2,500 per deposit, aiming to limit the damage a single scam can cause in one go. But criminals adapted quickly. In Christian County, Illinois, scammers told victims to visit multiple kiosks in different locations, depositing $2,500 at each machine to skirt the legal cap while still draining large amounts of money in a single day. Law enforcement there has managed to help some victims recover funds, and receipts now highlight a pathway for victims to contact both police and kiosk operators to report scams and request reimbursement under updated state rules. Beyond state laws, authorities are starting to scrutinize the industry itself. In Washington, D.C., the Attorney General sued Athena Bitcoin, one of the largest Bitcoin ATM providers, accusing the company of taking undisclosed fees on the backs of scam victims and claiming that more than 90% of transactions on its local machines were tied to fraud, with a median victim age 71. Athena strongly denied the allegations, arguing that it posts clear warnings, provides consumer education, and cannot be held responsible if users insist on sending funds, likening its role to a bank that processes transfers requested by customers. At least 17 U.S. states have now moved to regulate Bitcoin kiosks, and some municipalities have gone so far as to ban them outright, citing rampant fraud and the disproportionate impact on elderly residents. Consumer advocates like AARP are pushing for stricter national rules, too, including hard daily caps on deposits and more aggressive, standardized fraud warnings across all machines. From a scammer's perspective, Bitcoin ATMs solve several of their biggest problems. They get cash off the traditional banking rails, they reduce traceability, and they push the risk and responsibility onto the victim and the kiosk operator. Unlike a bank transfer or a credit card payment, once the victim feeds bills into the machine, scans the provided QR code, and hits send, the funds are converted to crypto and transmitted to a private wallet or through additional hops that make it exceptionally difficult to recover. AARP fraud experts note that criminals now prefer crypto over other payment forms, calling it the #1 method of choice because it's fast, perceived as complex, and poorly understood by many older adults. This gap in understanding creates room for scripts like, "The security department is moving your funds to a safe account," which sound plausible to someone who has never used crypto and is under intense emotional pressure. Crypto forensic specialists who trace these scams say many ATM operators know, or should know, that their machines are heavily used in fraud because patterns of repeated, high-value deposits into suspicious wallets are visible on the blockchain. Some experts accuse kiosk companies of turning a blind eye to obvious abuse, while the companies respond that they flash multiple fraud alerts during each transaction and insist that they cannot police every user decision. While the stories often focus on individual American victims, the money does not stay local. Funds pushed through Bitcoin ATMs can end up in foreign exchanges, offshore mixers, or wallets controlled by criminal networks operating across borders. This raises broader concerns for law enforcement and regulators about how small neighborhood kiosks in U.S. supermarkets may be quietly feeding global cybercrime, transnational fraud, and potentially even sanctioned actors. As the United States races to update consumer protection and crypto regulations, other countries are watching the Bitcoin ATM experiment as a test case for how far unregulated or lightly regulated crypto infrastructure should be allowed to spread. Some jurisdictions have already decided that the risk is too high, banning or severely restricting crypto kiosks, while others are trying to build guardrails around them without killing what they see as financial innovation. The policy dilemma is stark. Clamp down too hard and governments risk stifling legitimate crypto use. Move too slowly and more citizens, especially seniors, will see their life savings disappear in minutes at a machine in the corner of a convenience store. This tension between innovation and protection is becoming a recurring theme in global financial governance, from digital currencies to online lending and AI-driven trading. There is one golden rule that viewers should remember and share with parents and grandparents: that no legitimate government agency, bank, or law enforcement office will ever ask you to pay a fee, fine, or secure your account using a Bitcoin ATM. If someone on the phone or online tells you to withdraw cash, drive to a specific kiosk, and deposit it using a QR code they provide, that is almost certainly a scam, regardless of the story they attach to it. Red flag phrases include: "Your account is under investigation. We are moving your funds to a safe wallet. You must pay this bond or your family member will stay in jail." Or, "Do not tell the bank what you are doing. They might be compromised." Another warning sign is urgency. Scammers insist you must act right now, keep the call open while you travel, and ignore anyone who questions what you are doing, including bank staff or even police. For people who run stores that host Bitcoin kiosks, local police in places like Taylorville urge speaking up if a customer looks distressed, is on the phone while frantically feeding cash into a machine, or appears confused about what they are doing. In several documented cases, quick action by bystanders, noticing an elderly person under pressure at a kiosk and calling authorities, has meant the difference between losing everything and stopping a scam at the last moment. In Illinois, new rules now give some victims a shot at reimbursement if they promptly report the fraud to police and kiosk operators, and similar measures are being discussed or adopted in other states as the scale of the problem becomes undeniable. But prevention remains far more powerful than recovery. Once the cash is converted and sent, even the FBI and specialized crypto tracking firms often cannot get it back. Bitcoin ATMs are not inherently evil. They are tools, and like any powerful tool, they are being weaponized by people who understand them better than their victims do. If this video reaches even one family before a scammer's phone call does, it could mean tens of thousands of dollars saved, and a very different ending than the stories unfolding today in small towns and big cities across America. Share this video with parents, grandparents, and anyone who might pick up a call from an unknown number and believe the voice on the other end more than their own instincts. And for more breakdowns of the hidden economics behind fraud, crypto, and the future of money, make sure to subscribe and turn on notifications so you never miss the next deep dive.